Hello and welcome to today's video on high altitude investing. Today's video is part of the beginner series, and this is the top 3 mistakes that every beginner trader makes. So let's get right into this. Alright, so I'm at my screen here, and the first big mistake the beginners make is trading without a plan. They just come in here and they're like, oh, this coin looks really good, and so maybe they buy right here, and they just expect it to go in the direction that they want it to go. And sometimes it does. Sometimes it goes up and, you know, it's a successful trade, but most of the time they don't know where to get out. And so as the trade gets up and higher and higher and higher, they get greedier and greedier, less likely to sell because they just think that it's going to keep going in the direction that it's going. And then pretty soon the market falls back and they start denying the fact that it's going to go lower. They're in denial. They say, oh, it's still in its run. It's still going to keep going. You know, and sometimes it does. But the point of the matter is that if you had a plan, a spot to sell if you're right, and a spot to sell if you're wrong, then you can mitigate that risk. Meaning that if it comes up here, you get out of the trade, no questions asked. You know, you've got a spot in mind that you're going to sell. And if it goes down, then you get stopped out and you take a small loss. You want to make sure that the spot that you sell if it goes down is lower than the spot that you sell in correlation to going high. So, you know, again, you want this to not be like crazy low. You want the top part to be high and the low to be not that low. So if you lose, you don't lose very much. And if you win a lot. So, you know, I like to make my winners 3 times bigger than my losers, at least. So that means that in any trade that I take, I'm only willing to make 3 times as much as I'm willing to lose. So that's just a good rule of thumb to have. It's very effective, I've found, especially in cryptocurrency trading, to use a 3-to-1 risk to reward ratio, it's called. Meaning that you're only willing to risk, like personally I do 10 to 30, so I'm only willing to risk 10%, and I'm trying to make at least 30% on a trade. So that helps you so that you don't get stuck in a trade and you're not just trading on the fly and just guessing. So always have a trading plan. Always have a spot that you're going to take your loss and a spot you're going to take your profit. That's one major mistake that beginners make. And it's something that you have to do. There's no exceptions. Every trade that you make, you have to have a trading plan, because there's no other way that you'll be able to learn and adjust your trading plan. So I write down my trading plan on a piece of paper. I have a template, and when I look through these coins, I just know, and I look for that certain criteria in my trading plan to take the trade. Stellar is one that I'm looking at right now, and it meets my criteria in my trading plan. A nice rounded bottom formation, and it's falling back onto support here. This would be a good entry. And then if you have a trading plan, there's this plan tool over here on the left hand side. You can click. It will show you the percentage. In this case, I'm actually targeting a quite hefty percentage on this trade because it's following a lot of my criteria for a very, very impulsive move on the upside. So I see more than 100% coming in this coin, and I'm only willing to lose 10%. So that's an amazing risk to reward ratio. That means that I'm going to make 10 times what I'm going to lose if I'm wrong. So that's kind of a way that you can make your trading plans, but it's more than that. You know, you want to be writing this stuff down, having trading plan examples. I have one on my website if you like, highaltitudecrypto.io. You can just come here and then you can click trading plan up here at the top, and you can take a look at this example of a trading plan that I have. Just download it and look at the example here. It's just a great tool to have. And it's basically, you'll never get good at trading unless you do this. I'm a firm believer in trading plans. Anybody that trades without a plan gets stuck in coins. They don't know whether they should sell, whether they should take their loss. That's why you have to decide these things beforehand. So here's just an example of a trading plan. For some reason it's showing up kind of weird here on the internet version, but just looking for bottom formations, never panic selling, always having a target, setting your stop losses at 7% below the current price, taking profits at a 10% gain. Just having that trading plan in place is very important so that you know what you're doing once you buy a coin. You also want to make that plan before you buy it too. That way your head is on straight and you're thinking properly. The other thing that people do, and this kind of goes along with the trading plan, is emotional trading. So if you buy without a plan and the market starts to dip down like it did here, say you bought right here and maybe you buy this dip, okay? Let's just say that you're lucky enough to get in on a dip and the coin starts to rally right here, starts to really pick up in prices. It almost doubled in prices right here. So it was like an 80% swing from this dip up. The issue is that most people would hold on right here because they think it's going higher. When you nail a trade and you get in and it starts to go up, you always think that it's going to go higher unless you know where you're going to take your profits. And so you start to get emotionally attached to the direction of this coin, especially since you're invested in it. So that does something to the human brain. There's psychology involved. If you're invested in something, you're going to think that you're right. You're more likely to think that you're right. But as you can see, if you didn't take your profit here, if you didn't have your plan and take your profit, then you could see that it came all the way back down and even lower than your entry. And what happened was, you see all this volume that picks up in the background? That means that people got scared and started selling their coins because they were scared that it was going to go lower. So they were trading based on emotion, based on fear. And that's terrible. You never want to trade based on emotion. And like I said, the most effective way to eliminate that emotional trading is to trade with a plan, because then you can stick to your plan. They say, plan your trade and trade your plan. So never go against your trading plan. Always stick to it. And then make adjustments later if you see something that you could improve in your plan. The other thing is over trading. This is huge. This is very, very big. People get trading and they sit there and they look at charts, and I've done this before too. I'm a victim of it sometimes as well. You start to look at charts and you start to trade and you start to think that every chart is a good trade or everyone is a bad one, depending on what your mind state is. And it's because you're looking at charts too long. I really only recommend that you come and you like look for an entry at these charts for maybe an hour a day, 2 hours a day. Don't sit there and overtrade. Just make your trading plans, look at your charts, and then take your trades, and then come back and you can check up on them quickly throughout the day, but don't sit there and analyze them, because you'll overthink, you'll overtrade, you'll start to go against your plan. Always stick to your plan. Don't overtrade. I also tell people to only be in a couple coins at any given time, especially if you're new to this, because you're trying to understand what's going on in these markets. And if you have a bunch of coins and they all move a little bit differently than the other ones, then you're probably going to get stuck over trading, taking your losses too quickly, getting out of coins when you shouldn't be. And then a lot of times you'll get out of a coin because you start to see it go down and you second guess your trading plan, and then it rallies right afterwards. It goes significantly up in price. So it just goes to show that the most important thing for you to do is make your plans. Don't trade more than a couple hours. Don't look for entries more than a couple hours a day. And once you're in something, don't even think about going against your trading plan, period. Stick to your plan. There's no exceptions to going against a trading plan. You have to stick to your original plan. So, that being said, it's still, if you can get these things down, then you have a very high chance of figuring out how to trade these markets, because that's the one thing that 90% of the people that trade these markets can't get right. They just can't seem to stick to what they told themselves they'd do. And that's the most important thing you can possibly learn in trading, is making a plan and sticking to it. So that's my tips for the top 3 things, and we'll switch to the other camera. Thank you for tuning in today's video. I hope that you learned something. If you have any questions, go ahead and let me know in the comment section below, and I will catch you guys in the next one. As always, stay profitable.